Okay, let's do a quick revision. And then we're going to start working through the October 2015 paper. So we started off the module looking at tax. And then we looked at changes in accounting policy, changes in estimates, and errors. Those are the two big sections of work, isn't it, that come up in the exam for, I would say, maybe 3/4 of the marks. Tax and changes in policy, changes in estimates and errors. When we're looking at tax, there's a couple of calcs that we will always need to do. We will always need to do a tax calc. We will always need to do a deferred tax calc and a deferred tax movement. Yeah, the movement is what lands up in your P&L. And then there are notes. There's a tax note. A tax note has a tax recon. That's the other big calc. And also there's a deferred tax note. And it's very important whenever you see tax in a question, when you read the required, that you set up these calcs, the big ones, of course, being the tax calc, the deferred tax calc, and then this tax note with the tax recon, isn't it? That's going to be your main things. So you set that up, and then when you start your question, you immediately start looking at that. Then, changes in accounting policy and errors have a separate note. It's that separate note that goes back, retrospective. It goes back to 3 years, isn't it? It goes back 3 years. We go back to the prior year. And this separate note shows the effect of the change. And it shows the effect of the change on my statement of financial position and deferred tax /SARS. And it shows the effect on my statement of P&L and tax expense. So you remember that. The calculation that we do for these changes in accounting policies, estimates, and errors, for all three of them, there's a calc, and the calc is basically old, new, change. Yeah? Old, new, change. Changes in estimate go into the PBT note. Don't have a separate note. They go into the PBT note. It's current year and future years. So it's a bit different. Accounting policies and errors, we're looking at restating the past, correcting the past, and we have a separate note where we talk about the effect of that restatement. Changes in estimates are about changing the current year and the impact it has on the future. Completely different approaches or policy accounting treatments for the two. But the calculation for all three of these is old, new, change. Old, new, change. And the change is then what lands up in the note. So that's the two big sections of work. Then we did some smaller sections of work. We did framework. Framework is going to be a few marks. It's a theory question. It's going to be a few marks. We also did fair value. Also a theory question, also just a few marks, isn't it? Framework was all about the definitions of assets, liabilities, income, expense, and recognition criteria. And fair value was all about those different ways of determining what fair value is and the different the definitions. We then also looked at a couple of sections that kind of go together. Events after reporting and provisions. And together with provisions, we also looked at contingent liabilities, and we looked at contingent assets. Yeah. With events, contingent assets, contingent liabilities, it's just a note. So that one, that one, that one. Those three is just a note. No journal entry. With provisions, it's a big note, isn't it? Our provisions note is a big note. So provisions they like to ask either as journal entries, and you remember doing some questions where we had to do the journals, isn't it, of how much provision was released, how much was raised, how much was used. Or they can ask, we did those journals last week, in fact, before you left. Remember, we did that one question that was just journals, and some of those journals were provision journals. And then, or they ask for the note. The note for provisions is a movement note. Movement note. It's like your PPE note. What was the balance of my provision at the beginning? What changed? What happened in the year? Did I use up some of it? Did I release or reverse some of it? Did I raise new provisions? And what's the balance at the end? A movement note. And then we finished off. I hope I'm not leaving anything out. No, we looked also at related. No, we didn't look at related parties. Related parties is not even this module. We finished off by looking at revenue. And if you remember revenue, there's the 5 steps of revenue. And revenue really is, I don't expect to be a lot of marks in the exam. Revenue can land up with tax. If it's revenue I can't yet recognize, then it lands up in tax because we don't put it into our P&L, but SARS taxes us on it, isn't it, if we've received the money. So we land up sometimes with income received in advance for revenue. That lands up in tax. Where else can revenue come in? They could ask you to do journal entries for revenue. We saw those last week. And I suppose they could really ask you to even do a bit of a theory question if they wanted to ask you to discuss for a certain scenario how much revenue can be recognized because of those 5 steps, when we have to allocate the price to the different sections. So if I sell a car with a maintenance plan, they could give you a little question to say, discuss how you would recognize this revenue on the sale of the car with the maintenance plan. And then you would say that the car you would sell when that obligation is met, which is when you deliver the car, and the maintenance plan you probably would recognize over time, isn't it? And you would apply it to the facts in the question. Have I left any sections out? I think that's pretty much it. So if we're looking, you can see where the big ones are. We're looking at about 70% of your paper here, and maybe about 30% here, or maybe even more, 75-25, something like that. Okay, so we are going to work through the October 15 paper. It's the one that we don't yet have solutions for. The other ones we have. And it's quite typical in a FAC3701 paper that there are 2 big questions. 2 big questions. And what you'll also see is that almost every question has an element of tax in it. So you can see question 1 here has income taxes. Question 2 also has income taxes. So tax is pervasive throughout the paper. And then what you also see is that accounting policies, changes in accounting estimates, and errors also appear in both papers. Accounting policies, changes in accounting estimates, and errors. And typically what will happen is one question might have a change in policy, the other question might have an error with a change in estimate. It will be different things. And then on top of that, then the other sections you'll see coming through in the rest of the questions. So in the first one, we have events, and we have provisions, and we have contingents. In the second one, we have presentation, we have revenue, we again have provisions, we again have contingents, and we have fair value. I presume that first one, presentation, I think is maybe framework. I don't know. It should say framework, though. We'll have to have a look what that is. All right, so that's your typical exam paper. When we read the question, the first thing we do is look at the required. I think that's the approach that I like to use, because when you deal with the items one by one, you want to then go fill them in on the right required, isn't it? We look at the required, and I know last week I said to students, we look at the required, then I found students working according to the required, and that's not what I want, isn't it? I don't even think it was this class. We look at the required, but then when we work through the question, we work through the question piece by piece. So if we look at this required, the first required is to discuss with the FD whether the FD should make a provision for incentive bonuses discussed in additional information 3. So this is a discussion question on provisions. Should the FD make a provision for bonuses? Remember that when we're looking at accounting treatment has 5 steps. Yeah? Accounting treatment has 5 steps. Step 1, definition. Step 2, recognition. Step 3, initial measurement. Step 4, subsequent measurement. And step 5, presentation and disclosure. This question is asking you to discuss whether the FD should make a provision for incentive bonuses. So they're not asking you about measurement. Do you agree? They're not asking you how much should he provide. They're asking you, should I provide? So they're asking you up to there. They're asking you, should I recognize a provision for bonuses? So we're looking at definition and recognition. You know that the definition of a provision is a liability of uncertain timing or amount. So you have to start with the liability provision from framework. So this question links a bit with framework, but that's essentially is that question. Do we have something that meets the definition of a liability according to framework and according to IAS 37? A provision is a liability of uncertain timing or amount. And then if we do, so we have to have an obligation, in other words. If we do, is it probable that it will happen, and can we measure it reliably? If those two are both yes, then we have to recognize a provision, isn't it? So that's that one for 5 marks. Then question B is for 11. It asks you to calculate the current tax expense. So that's a current tax calc. So you would set up your required, you would leave half a page for the first. Then I would almost leave a full page, isn't it, for this one, for B, a tax calc. You just don't know how long it's going to go on for. Then C is to calculate the deferred tax balance as at June 14, according to, so this is a deferred tax calc. It's about half a page. 4, or D, is a journal entry for the change in tax rate. That's about half a page, although it's one journal, but I would just leave lots of spaces. So 1 journal entry for the rate change. Then E is to disclose the tax note, including the tax recon. So that's about a page, because it's about half a page for that top bit, isn't it? Current tax, deferred, foreign, etc. And then about half a page for the tax recon. And then F asks you to disclose information in the notes to the annual financial statements. And you'll see that the disclosure they're asking for is IAS 8, changes in accounting policy, and IAS 10, events. So either I have a change in policy. It's unlikely that I have a change in estimate, because for 14.5 marks, it's going to be a lot of work. Okay? My guess is that it's a change in policy, but it might be a change in estimate, an error. And then there's an event. So I would just then leave space for those, and I would just make a note at the top, financial statements, whatever notes, and I would just make a note that when I get to 1.1, I must go do the note. When I get to 2, I must go do the note. When I get to 4, I must go do the note. Yeah. So once I've done that, that's the first step, and that's also my first step that I'm going to do when I start the question. Then I go back, And then I say, okay, I'm going to start reading it. So they tell you that the company is an aviation company. They're listed on the stock exchange. They charter private planes from Lanseria to various destinations in southern Africa. And that the profit in the draft financial statements was 840. So we have a profit number before tax, isn't it? So I can go and put it in my tax calc, and I can go put it in my tax recon, isn't it? I think that they say it's draft financial statements. So there's a chance that that profit might change. But I can start with that number, and then if there are adjustments to it, I can make adjustments. All right, then we start with the additional information. The first thing they tell you is about PPE. We know that PPE is going to come into a tax question, isn't it? So they tell us about PPE. There's a building and there's an aircraft. And then they tell you about something, and they tell you about the building and the aircraft, and you're going to go deal with this 1.1 building and aircraft. And guess what? They've changed the depreciation method. So I said to you, there's no change. It's probably a change in, but this one is a change in estimate. So 1.1, do you remember we had to do a note for 1.1, and there's going to be a change in estimate here. The change in estimate changes my profit. It will change my profit, and it will be a note. So here we have a change in estimate. And so when I do this first one, this 1.1, I'm going to do everywhere where it applies. I'm going to put the relevant information into my tax calc, isn't it? I'm going to do the journal. If there's a journal, there was no journal for estimate change. I know it was a rate change. I'm going to do the disclosure. I'm going to do everything for 1.1 so that I don't have to come back to 1.1. Then I'm going to do 1.2, and I'm going to do everything for 1.2. Okay, so that's the approach to doing the question. It is 48 marks, 86 minutes. I think it shouldn't take 86 minutes, right? This is where they gave you the extra hour to write. Did some of you write the extra hour last semester, or none of you? Well, was it useful? Did you finish if you had the extra hour?
I wrote it for my only video subject was tax.
And you got the extra hour? And you were done in basically just over 2 hours? Or?
Yeah, it's nice because you don't have to rush it.
Okay.
As much as usually.
And you also?
I think I was done in 2 hours.
Yeah, because that's the pace that you're used to working at, isn't it?
But it's also like if you need the extra hour.
It's nice to know. So it makes you feel less anxious, does it? That you can, like if you're stuck on something's bend.
Yeah,
Okay.
a little less rush.
So,
When you go back 2 hours again. When you have second year subjects.
no, do you know what I think will happen is that what we'll have is we'll have creep. Oh, you mean when you have second year subjects, then you get confused.
Yeah.
Yeah.
You go back from that 3 hours being relaxed, and then 2 hours you have to.
Yeah.
Push.
Yeah. But I think that what will happen is that what we'll get is we'll get creep in terms of how much they're asking you to do in the 3 hours. It's not that you won't get that feel that, oh, okay, I've got extra time. Eventually that time will be filled. That's my feeling on it. Yeah. Okay. All right, so we're going to work. We're going to try to make the good things. Okay, so let's see what was tricky. What for me that first one, the 1.1 and the 1.2, I started to get frustrated with how long it was taking me to get through all that information. But then when I carried on reading the question, I realized that was a lot of the bulk of the workings and the calcs, wasn't it? Were there. So if we have to look just at those first two paragraphs, the ones about the property and all of that, I mean, it's that number, this number, the profit on sale, the CGT. Yeah. Then down here, we had to do into the tax recon, the profit on sale up to cost, the CGT also go in there, and the depreciation on the building. Those are all permanent, eh? Exempt differences up to cost. If you remember when we do PPE deferred tax, up to cost is exempt on buildings, on admin buildings. Above cost is CGT. So that up to cost piece is exempt. It would come in there. Then in our deferred tax calc, we've got the aircraft. We've got that number, that number, that number, that number. All of those go in. So you can see, and then there was the change in the depreciation of the aircraft and this whole note here. So you can see a lot just from that first paragraph, hey, before you even started to read about the rent, hey. So it took long, like to do, but it is important just to do it, just to do your calcs. My calcs are on the next page. You had to do a couple of calcs. You had to do the calc on the profit on the building. You had to depreciate it for the year. That depreciation would have gone in your tax calc and in your tax recon, because SARS doesn't allow, so it's a temporary, a permanent difference, an exempt difference. You had to work out this capital gain. You also had to do this change in estimate calc, yeah, the old new change calc. When you did this change in estimate calc, you would have seen that your balance at the end would have been the 1824, which was the number given, and then that would have been, oh, okay, it's right, you know. So that was, so you can see just how much work was there just on all the PPE stuff. Because the other stuff, I think, was more straightforward, isn't it? The other stuff was more there were credit losses, there was rent paid in advance, which was half the year. It was easy to work out because it was very obvious 6 months, 6 months. The credit losses, yeah, maybe it was a bit tricky, but they said to you what went into P&L. So we know we remove what goes into P&L, we put in what goes for tax, and we know that SARS allows 25%. So whatever we remove, SARS allows 25%. The provision grew, isn't it? So that number lands up there. There was an error, but it was an easy error. It was sales that were duplicated, isn't it? So what happened? It was credit sales that were duplicated. So accounts receivable went up, was too much, and sales was too much, isn't it? So there's the impact. Receivables and sales, they both need to decrease. And then there's the tax. And it's current tax because SARS said they would reopen, isn't it? So it wasn't too bad. I think that what it is getting used to working with so much information, and it's in pieces, isn't it? So you would have, I don't know, you can go and try and do the calc again, the question again, by doing it just like bit by bit. But what happens is that you read the whole question to do B, which is just the tax calc. Okay, you'd have to read the whole question to the end to do B. And then when you move on and you're now doing C, you're having to go back again and look at the same information, because perhaps the way you looked at it to find the numbers for B is different to the numbers that you need then for C. Do you know what I mean? But it is getting used to doing it like that. As you move through, you'll see that in almost all the modules, the questions are so integrated that one calc lands up in a number of places, isn't it? When you're looking at one thing, it lands up in a number of places. It makes sense if you've done all your calcs and all your workings for the building, that you finish it, that you put it everywhere, isn't it? Because that could have maybe passed you already. Yeah. Rather than then you get to F, and there's a story there about the change in depreciation, but you've done the calcs, but you didn't put the note in, isn't it? So maybe now you're going to lose those marks. Or maybe you don't get to the tax recon, which was E, you know. I don't know. That's just my feeling on it, is that the minute. But I understand that it doesn't feel natural to do it like that, because you guys are used to answering required by required. Yeah. But with the requireds being integrated, it makes it more difficult. Like here, required A, you could have done straight off, I suppose, if you'd wanted to.
I think I'm also scared with sitting and trying to think about all of them. I'm scared I missed it in one place.
Yeah.
And it's like, hey, go say, then I skip that one.
Yeah, but when you get there to finish it off, then you'll realize, oh, okay, I forgot to put that in. You know, when you're finishing off these notes, then you're pulling the numbers through or whatever. Yeah, practice. So next week we'll carry on and we'll do you guys want the print of this one, or can you wait? Are you going to go work on it? Or can you wait until it's all done, then I'll give you the whole paper?